So we already know the importance of separating our personal from our business finances and some different banks that offer business accounts. But how many accounts do you really need for your business? Most financial professionals would say 5 at minimum, but it really depends on your business and its needs because no two businesses are created equally. So let's break down the different accounts that you might need. The first account we want to set up is the operational account. This is the account that we will run our income and ordinary expenses through. All the income we receive via cash, direct deposit, wire transfers, or whatever goes into this account. All your ordinary and necessary business expenses will flow through this account as well. Some of these expenses can include rent, utilities, subscription services, business insurance, payroll, contractor costs, but you always double check with your accountant to see what expenses actually qualify. I will say you can break the payroll and contractor expenses down even more by having one account to track these expenses. Again, this is going to be based on the size of your business. If it's just you on payroll, you may not need this separate account because you may only run payroll once or twice per year. But if you have a team of employees, there's a greater chance for errors, employees getting hired or fired more often, or needing a last check ASAP. So you may just want to keep this money separate from the rest of your income and expenses. If you choose to have a dedicated payroll account, you can also pay your payroll taxes from this account. You'll be able to run reports specifically on this labor data and see how much it's costing you to have employees. The point here is the more you break down and track your dollars, the more insight you'll have about your business's financial position. The next account we want to set up is an ad and marketing account. This account is super important because marketing is how we go after our potential clients, and without clients, we have no business, right? Well, that's why the IRS gives us deductions for this expense type. So in order to take advantage of the advertising deduction, you must properly record these expenses. And having a dedicated bank account makes it super easy. So you can deduct things like website hosting fees, SSL security certificate fees, paid social media ads for Facebook, Instagram, direct mail, radio, billboard, bus bench signs, pins, t-shirts, photo shoot costs. If you book studio time to record content that's used to advertise, or you pay a photographer or videographer, there's so many marketing channels. So again, just be sure to confirm any expenses with your accounting professional. You'll want to set aside at least 10% of profits on a monthly basis. Profits are the money left over after your expenses have been paid. So don't just take it from the money you had coming in. No. The next account we want our business to have is a reserves or emergency savings. This account is for an absolute emergency, and it is not to be touched until you desperately need it. Like in the event the government shuts your business down for many, many months or even a year. Your contributions to this account depend on your profitability, but 10% of profits is a good place to start. You want to build this account up to have at least 6 months of expenses on hand. The next account we should have for our business is a tax account. This account is going to be used to hold the money you'll need to make your quarterly or annual tax payments with. Most financial professionals suggest setting aside 30% of net profits but your tax bill is really dependent upon your income and expenses. So the better you plan and track your financials during the year, the less your tax bill will be at the end of the year. But until you optimize your tax plan, it's a good idea to set aside 10 to 30% of your profits. I know this is a big gap, but your tax rate is dependent upon your profits. The last account I'll touch on is an opportunity or innovation account. Again, this can be 1 or 2 accounts depending on how much you want to fine-tune your financial reporting. This account is where you'll hold money for future unexpected business opportunities you may be presented with, or if you come up with a new product or service, it's going to take capital to bring that to the market. So you want to make sure you have funds available, especially if you don't have business credit or a lender yet. You'll need this money to continue to grow, scale, and revolutionize your business. This is a bonus account. You don't have to separate this out from the standard opportunity and innovation account, but if you want to fine-tune your finances more, you can go ahead and open an equipment and asset account. You'll use this account to store money specifically for equipment or assets you plan on purchasing for the business in the future. So to recap, these are all the different accounts you should have in your business: an operational account, an ad and marketing account, a reserves or emergency account, a tax account, opportunity and innovation account, and potentially an equipment and asset account. You don't need all these accounts at once, but at least get started with the operational account and add more as your business grows. Comment below how many business accounts you use and what you use them for in your business. If you found this information helpful or valuable, please like, subscribe, or share with somebody you think can use this information. If you have questions about your bookkeeping or accounting system, please visit my site, luxurytaxprep.com, and sign up for your free 30-minute consult.